I'm Catherine Ross, and I'm here live from the NYSE with Action Alerts Plus senior analyst Jeff Marks. Just a reminder, Jim Cramer is out all week. So Jeff, over on Real Money, Jim Cramer wrote last night about how he believes that the market is oversold. And I'm wondering, is it oversold?
Yeah, so I still think it's oversold. We got that bounce yesterday, but we're seeing stocks come down today. So I think we are moving into this oversold condition. The down day today, tomorrow, if we get another one tomorrow, that will help. And then what you'll see is, sort of this oversold bounce that you hear of. So essentially what's going on is, when we get to a certain point where we are this oversold condition, what you'll have is the people who are short the market, they'll cover. And when they cover their shorts, you'll get this oversold bounce, which was almost like what you also saw yesterday. So that's kind of what Jim's kind of anticipating here. He talked about this on a Real Money piece that he had out today, and it also kind of went into how yesterday's rally and what we're seeing today. It's pretty orderly, right? So the stocks that you would expect to go up, the ones not really beholden to China, they don't have that tariff exposure, they're going to be the ones where they can maintain the P being price to earnings, which is essentially what investors are willing to pay for a stock. Whereas the other stocks, even if they do put up a good earnings result, you might see that P, the price to earnings ratio, decline because investors don't want to be in there because numbers are eventually are going to have to come down if you have that tariff exposure. So that's sort of the dynamic going on today in the last couple of days.
And I gotta say, guys, I was catching up this morning because I've been out sick for the past 2 days, and I was catching up.
Feeling better.
Thank you.
Yeah.
I was catching up by reading Real Money, and I gotta say, we have excellent analysis on the markets, what you need to know about the China trade tariffs, and also really interestingly enough, Helene Meisler had a kind of opposite take. She called the rally yesterday, quote, this is a direct quote from her, pathetic. So that's really interesting if you want to check it out on realmoney.com.
Yeah, Helene's great. So she has the top stocks. It's something I read. It comes out every night, and she has an article in the morning. I think she's fantastic. She's a great Twitter follower too.
Oh, I completely agree.
So that's like a must read for me too as well.
So Jeff, we got to switch gears because we got to talk about some earnings. And the first earnings that I want to talk about is actually our Real Money stock of the day. So I actually want to bring in Kevin Curran, our Real Money reporter. So Kevin, what is your first thought on Macys?
Well, my first thought is what a ride from the pre-market. So I think when people were looking at the headline numbers, they saw them beat on EPS pretty significantly, and the stock went up about 8% as the retail sales numbers came through, and there's a little bit of weakness there. And then people dug into what was in the print itself, and I feel like I'm kind of on the Brady Bunch here where it's margin. It's getting eroded quarter after quarter after quarter, and people are saying, how are you going to counteract this? And management's being somewhat vague on that, so I'm really not too optimistic on that. And then also the guidance forward, can that be maintained if the macro factors on retail sales continue to put a tamp on that, with tariffs obviously withstanding?
And, thank you for mentioning the retail sales numbers because they came down. We expected 0.2% up, and we got a negative 0.2%. So I guess my question is, now that we're about to hit the retail earnings season, what is the read-through for the retail earnings season?
Yeah, so if you're looking at Macys sales, it wasn't that weak. They came in pretty much in line with revenue, and they beat on EPS, and their net sales were pretty good. I think that you have to find out where that weakness is. Obviously, it's going to show up somewhere. We have Walmart later this week. We have Kohl's, Target later. There's weather impacts that might be impacting certain people that might not have affected Macys as much. It's going to have to show up somewhere when you get this broad set of data. And I think it's going to be interesting to hone in on today on Real Money is where is that most likely to show up, in what regions, and what retailers, et cetera.
Yeah, and actually I would add, it kind of goes back to the point that we were just talking about before with Macys. Macys, it looks like it was a pretty good number. It was a comms beat, big earnings beat, sales beat.
Digital growth was good?
Digital growth was good in the key areas, but it's giving up its gains because, again, it's going to have that exposure to China. All these retailers are going to have that China exposure. It was the same thing with Ralph Lauren that we saw yesterday. Another good print, another kind of continued towards their progress in that company's turnaround. But if you have that China exposure, people are going to sell your stock, and that's going to hurt the price earnings multiple. On the other hand, stocks that really aren't exposed are some of the cloud names, the cloud kings, which rallied yesterday. Some are holding up today pretty resiliently. I know New Relic had a disappointing forecast yesterday, so that might temper things. But a lot of the consumer packaged goods stocks, that's where a lot of people are going to go to because, again, they're not going to really have this China exposure.
All right, Kevin, thank you so much for joining us. And guys, if you need coverage, which you do on retail, because those sales numbers, were really bad, check out realmoney.com. All right, so we got to move on, and I want to talk about more earnings, and that's cannabis. So we saw Tilray and Aurora. They announced earnings last night. Tilray beat, Aurora didn't. But I think that we need to look at the cannabis sector in general. So my question for you is, what should investors look at in cannabis right now? What's going to send them higher?
So I think there's three things you need to see in the industry, right? One, further consolidation, right? When you have these companies need to gain scale quickly in order to not only meet demand, but also just so they can kind of distinguish themselves from each other. So I think consolidation would be one area where you could do that. Increased partnerships on both the medicinal and consumer package side, and that's the same goes as with investments. So Canopy, which is kind of the one that we like, is because they have the huge investment from Constellation Brands. So if these companies continue to get those types of investments and financial support, that's another way you can see these stocks go higher. And I think those are the two. And also legalization in the United States. I mean, that's obviously a clear one, but that's out of their control. The other two is kind of more in their control. Legalization out of their control, but something on the horizon.
So let's take it from an investing education angle, and I'm going to ask you what is it going to take? These companies are not profitable, so what's it going to take for an investor to invest in them?
Yeah, that's a great question. So I think when you're evaluating these companies, first and foremost, you got to look at the sales, right? So companies can get pretty, I'll say, flexible on the bottom line when they're looking at earnings. A lot of people, they look at adjusted numbers, so they can be flexible. But the one thing you can't touch, the one thing that really is what it is sales. So if you see good sales growth, that's going to be one area where you have a solid company. And then also, these companies aren't profitable right now, but that's not necessarily a bad thing because they're investing in their future. So take, for example, Hulu, right? So yesterday, Comcast and Disney, they signed off on a huge, 5 years down the road, they're going to, Comcast will be selling their stake in Disney, in Hulu at a valuation of like $26 billion. Hulu has steep operating losses right now. So it's not necessarily a bad thing to not be profitable as long as there's a path for profitability in the future.
I think that's a really excellent point.
Thank you.
All right. Thanks, Jeff. So that's all we have time for today. For all of you watching on TheStreet.com or on Facebook, we are now jumping over to our Action Alerts Plus members-only club video on ActionAlertsPlus.com, where we will be diving in on what stocks the Action Alerts Plus team is watching.
Yeah,
I'm Catherine Ross.
We got a lot to talk about over on that one with the market down today. I see it's still down, so it's going to be a big video today.
Yeah, I agree. All right, I'm Catherine Ross. Thanks for joining us, and we'll see you tomorrow.